Good afternoon. Welcome to Options Center. Today is very, very important. Please hear me out. Know that I wanted to give you a heads up today because I'm likely going to switch back to my bearish, very bearish position. And I'll show you exactly why on the Qs. We're going to go through Qs, the triple Qs. From the monthly down to the 65, we're going to check out the two Elliott wave counts that we have. The one I'm switching to as my primary, being bearish, and the secondary or the alternate where SPX still needs to make a new high, or SPY or ES. Now, if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. We have lots of great information on this channel. And don't forget to hit the notification button. We do these videos as often as possible. When new information presents itself, we have to, as traders, we have to switch our positions when necessary. So I needed to get this video out today. I wanted to do it early. The trigger has not been pulled, or however you want to say it. It has not happened yet, but I think it is very likely that it will happen today or tomorrow. Okay, so let's go ahead and get through this. We're gonna check out a few indicators here. We have the monthly time frame. It's just a huge move off of this long-term trend line. We had a huge move, and you see we're getting back up to the breakdown candle high here. It's going to act as supply, so naturally we want to see a pullback, and in the event that we do, we want to keep in mind that we may go higher. Now, when I switch my positions primary, I have I'm not a fundamentalist, but I have sort of the Fed on watch. Excuse me, I'm not going to get all into that, but so I think this top is in. I think this top is good. There's so many different reasons why that we think the top is in, and we should see lower prices from here, and that this is just a retracement. Either way, as of yesterday, a few days, when we started to talk about buying the dip, well, we still didn't think we'd make a new high. We just thought we'd make a high above here and reverse. And I think the Qs are about to do that, and I'll show you. So if we put up a few indicators, you see that on the monthly time frame, we crossed back bullish, and we're looking to go back bearish, but it held on. So that is not a signal yet. I still think it's likely that that crosses over in the case that we start to break down. The RSI, you're seeing if we do, again, well, I haven't shown you yet, but I think we're going to eke out a new high here above this one, perhaps intraday, or maybe we hold above for a day, but I do think we eke out a new high just on the Qs. We're going to get a lower high on SPY, and this changes everything, you guys. We'll talk about it a lot more as we go through. If we get this new high today or tomorrow, look at the divergence. Monthly bearish divergence, huge. We already crossed over on the slow stow. We haven't crossed to the bull side. We have our sell signal here, and now we're back testing. And I would argue that we are going to continue the cycle lower. Sorry to whiplash. I don't care if I'm a bull or bear. I just want to be with price action. Okay. So on the weekly time frame, this is a very, very important time frame for us. We were talking about filling this out. If SPY or ES, SPX continues to move higher and make new highs, I still think this will fill out and that we possibly might even get a new high on the Qs, but not on SPY. Okay, that's very important. And the same scenario, if we go higher, is the same scenario we're going through right now. So we want to eke out intraday at minimum a new high above this candle. This candle high is at 387.98. Our high so far today is 387.75. We missed it by 23 cents so far. So we're certainly in a bullish position. We're above all these prices. La-di-da-di-da-di. We're back into huge supply. So you know how, if you've watched my videos, I usually box these sort of areas in. They act as resistance, or if you get inside of their chop zone, and then resistance up here, or support. So we're right back into that zone where we reversed before. So we're into supply as we speak. It's just a matter of if we get this new high or not. If we do not get this new high and we reverse from here, then you have to forget everything I said about switching today, switching to the bear scenario. We're still going to be looking for a higher low if we do not eke out a new high today or tomorrow. Then we'll be looking for a higher low to get above those levels. We're going to get above these levels one way or another, whether it's today or tomorrow, or we pull back for a higher low and we continue higher. Hope that makes sense. Okay, so for our weekly indicators, we're trying to cross over to the bull side on the MACD, but we haven't done it yet. So it's still super important. We're in bull territory, but we haven't crossed over on the bull side yet. And all this is going to do, if we eke out a new high right here, is we created a divergence. Again, a divergence on the RSI as well. And this would be a huge, huge sell signal. We're already in overbought territory on the weekly time frame. So now I'm going to argue that we already cycled to the upside. We already are in overbought territory on the slow stow. So this could easily roll over from here. Okay, on these bear market rallies, we cycled all the way through on a lot of them, but we didn't necessarily stay above like this. When you're really in a bullish move, you can hold above here, and price action can continue to the upside. When you have for example, this pullback and a rally again, we don't need to do this whole motion up there. We can get up there, spike up there, and cycle back down. All right, this is bull market territory. Okay, this is just our last move, getting above there and then cycling back down. All right, so we're already in overbought territory on the weekly time frame. We want to eke out this new high, and I'll show you on the other charts. But remember this on SPY, we have a 5-wave move down. We can count it as 5 waves. On the Qs, we can't, because this third wave is the shortest. Wave 1 is longer. Wave 5 is longer. So this is not a valid impulse. And so that's why I think that that's why the price action did what it did from this point and just shot up, because it needed to get above this so we can finalize our count. SPY didn't need to satisfy that. SPY can get a lower high. Qs cannot, if it's going to fit any of these scenarios. Okay, now let's go ahead and go to the daily time frame. I hope this is clear. I'm going to repeat myself. There's going to be some people that maybe are going to get it, and some that aren't. I don't need that pivot anymore. We're not holding that. Okay, so just a little closer look here. after this massive move, this is an impulsive move. So clearly this can be a wave one. But if we eke out this high here, just a few more points, just a couple of points, then this 5-wave move can be the last move to complete this correction. All right, and I'll show you the wave count. Again, if we do get a higher low by chance, and we'll probably know if we do not hold this channel, that will be considered a fake break, and we continue lower. If we hold this channel, pretty sure that's going to be a higher low, and we move up from there. We continue to fill out this wedge, and we go to the alternate scenario. So let's go ahead and pull out the daily time frame. Now we're in that 786 territory from all-time highs, so this is naturally gonna, you see price wrapping around. It's an important area. How we're counting this is this is an A. You had a 3-wave move up for A, a B, 3-wave move down for B. That could be expanded flat there. Doesn't matter. And then this counted out perfect as a 1, 2, 3, and 4, which came right back into this 382 from wave 3, a 38% retracement, which is picture perfect, and spiking up here. And again, we have to take out this high. I know that if we don't take it out, you're going to have somebody saying it's a truncated 5th wave. Possible, but those just, you can't count on those. I want to see it eke out a new high. So that would be complete our top, our wave 5, our C, our ABC, the larger wave B, which means, and this could be a 1, 2 in the red there. Let me get rid of that one. But what I have so far is initial A, possible B, and then a C would end it much lower. Or this could be a 1, 2. We'll talk about that in the future. It doesn't really matter. Either if this is a 1 or A or 2 or B, they're going to do the same thing. Now, going to the 65. The 65-minute chart, we have this bull flag that we broke out of. We had a fake breakdown from this pennant, or you can redraw it as a flag, doesn't matter. Broke above it, so technically this is a breakout. This breakout, if it's legit, should hold. And now that we can go to this Elliott wave and just get a closer look, and I just want to show you why I do think it's possible that we get one more high to tag and get this our alert right here. That's the 387.98 that we have to tag. And so if we count this 1, 2, 3, 4, 5 for a 1, it's wave 1, and then 2, that's a flat pattern, and then 1, 2, 3, 4, 5 for wave 3, and then expanding flat for wave 4. And now we're eking out wave 5 here, where you have 1, 2, and then 1, 2, 3, 4, 5 for a completing wave 3. And we're looking at wave 4 right now. So wave 4, like I said, is typically the 23.6 all the way to the 382 would be typical pullback, which brings us right to the gap. Our gap up from CPI. So I do believe if we hold this gap going into tomorrow, that we should see a new high, one last high up into possibly Friday, tomorrow or Friday. Either way, by the end of this week. Now, crazy things happen on OPEX week, so it's possible we maybe gap down tomorrow. We get eke out our new high, and then Friday we start tanking. Okay, so be aware that anything can happen on OPEX week. Huge moves both directions. We've already had a massive move up. We could have a massive move down. Okay, so that puts out the picture. We again, it should hold the flag, which is probably a retracement back to 370 area. But I do have these retracements that are going to be available just in case, so we'll put on protection or take profits into some of those moves. But our bearish scenario is we should have a nice big move down for wave 1, possibly lower, and then pull back for wave 2. So we're still going to get a chance to get in either way. We are short already. We do expect a little bit higher. We will add on to those shorts if we do. If we don't, you got a new high here. All it means is that we've had our move. That'll be a wave 1. We'll have to move back to, we're getting a higher low at some point to go higher. So I'll consider that bullish scenario if we don't make a new high here. Bearish scenario if we make a new high. All right, now let's go ahead and jump through a few of the names here. Maybe probably best on the daily time frame. We were looking at VIX. VIX is trying to get off the ground, which it may, with the last move, actually start moving up with the market. So it's still holding this area nice and strong. Remember, I mentioned yesterday that with the VIX, you see, this is the bearish highlight, or excuse me, the bullish highlight, to where the market is going to see a pullback. VIX is going to back test this wedge and head lower. Now, the bearish scenario on the market, the more bearish, is this large wedge. All we're doing is back testing this big old wedge here. Had our initial move up, broke down, back testing the wedge, and we continue much higher to make new highs here. All right. And both make sense. We just have to watch price action. Both of those make sense. But either way, we're getting a pullback no matter what. So we need to make some money on the way down, and then get ourselves positioned for either a bounce or a continuation to the downside. So you have Apple with our Elliott wave. This is the bearish count. I didn't do this for all of them yet. We have our A, our B, this expanded B, and you can do this different ways. This could just be the top, and we're just now getting A, but I'm trying to keep it to where it's very similar to the market. So we have our expanded flat B, and we're looking for 5-wave move down for C, much lower expanded flat. And so getting a little bit closer here, where we have a 1, 2, 3, 4, 5 leading diagonal for a wave 1, and then a pullback for wave 2. Amazon, I pointed out in the room, in the Discord yesterday, that Amazon finally reached its 62% retracement. That's huge. That's huge. That's a perfect AB or 1-2 setup for Amazon. So that fits the scenario. Meta's still making a lower high, but this could be easily an A, B, or a 1-2 just as well. And you would count this. I don't have it changed yet. We'd have our B up here. It could be a WXY, B, it doesn't matter how that's counted. And then this would be a 1, 2, 3. These are all 3-wave moves. 3, deep 4 pullback, and then wave 5. So this easily could be counted done. This could be done. Could eke out just a few more points if it needed to. But this is done. This is an ending, expanding diagonal. And if you know what I mean from that, it just means that wave 1 is smaller than wave 3, and wave 5 is the largest. So you see how big wave 5 is? Wave 3, wave 1, and also the other way around. So wave 2 is small. Wave 4 has to be larger to be a expanding diagonal. This fits perfect for that scenario. And then most people will draw it. I'll go ahead and draw it for you. That this is the from 1 to 3 up there. This is picture perfect for expanding ending diagonal right there. Fits all of the criteria. The wave 5 doesn't have to hit the top of this this expanding or megaphone, whatever you want to call it. It doesn't have to hit the top. The only criteria is that it has to be larger than wave 3. Wave 3 cannot be the smallest. Wave 1 is the smallest. Wave 3 is in the middle. Wave 5, that's picture perfect, you guys. Doesn't get any better than that. Google is probably the most obvious that it had its A, B pullback with its ending diagonal at this bullish rising or bearish rising wedge, and all we're doing is kissing it. We're back testing it, and this will continue lower. These setups are amazing. Now the big question is it just initially a wave 1 and pullback for wave 2? I don't think so. I think it's ABC, and that this is our impulsive move down for 1. I think I have it. I don't have it marked up yet, so I didn't mark them all yet. Okay, on the hourly I had it, so that our B is already in place, and we're looking for a 1, 2, and we head lower. Now this next move, if I am correct, and we eke out that brand new high, that's a super important thing that has to happen. Super important. So if it ekes out a new high in the Qs, then this next move to the downside is going to be massive. It's going to be huge. Now this one is getting a new high. It looks pretty much like the NASDAQ, except it made new all-time highs. So Microsoft, I don't think I have it updated yet, but you'd put the B over here now. And we'd probably count it the same way as we did the Qs, maybe an A, B, and then 1, 2, 3, 4, 5. It's a finish all-time highs. All right, that should be done, or within a day or two. Tesla worked out absolutely perfect, where this is our initial A. You have an ABC here for an A. It's kind of hidden here. There's our A. Our 3-wave move up for a B. And now with the move that we had, we were completely wrong. We were calling Tesla to possibly make another low, and that would have fit our bullish scenario a lot more, but instead it went up. So clearly we lost money on Tesla, but it set us perfectly up for a 1-2-1-2 setup. So we have our 5-wave move down for 1, 3-wave up for 2, and then 1, 2, 3, 4, 5-wave move down for a 1, 3-wave move right to the 62% retracement from this high to this low. 62%. That's a picture perfect 1-2-1-2 setup. That's a very bearish setup. And we continue much lower. Okay, I don't know what the catalyst is going to be. We have a few things that are kind of looming around. We got our PPI and our CPI information out, so I think something else might force the Fed to pivot at some point, because perhaps the market starts dipping prematurely. The expectation for a Fed pause is already there, that they're not going to raise. We can see that on the FOMC site. There's 100% that Fed is not raising anymore. So that's off the books. Now it's a matter of a Fed pivot would just put a nail in the coffin, and we're probably going to see that sometime by year end. I don't know, or by next year, sometime. I couldn't tell you, but I can see that the market is really, really looking to set up here. And then we have NVIDIA. NVIDIA is in the same position. I do have a channel top here. It did not eke out a new high. It doesn't have to fit our scenario because we have a 1, 2, 3, 4, 5 wave move down. This would just be considered a double top. So it'd be very similar to SPY. And I might as well show SPY while we're here so you don't have to go back and look at all the videos. I would love it if you did. But just know that we're going to use this as the top. This is our count for SPY. SPY is not going to make a new high and is counted as an A, B, C. All right. And 3-wave move up for A, 3-wave move down for B, and then a 5-wave move up for C. And that will be the end of B. And now we have our initial impulse wave as a leading diagonal. 1, 2, 3, 4, 5. And we have our A, B, C correction into that 786 zone. It's beautiful. It's a deep pullback, but that doesn't mean anything. We thought we were going to have the pullback right here at the 62% retracement. Held on to that, and then CPI in the morning just ripped us a new one. And you know, you have to be careful with catalysts like that, but it doesn't change anything with our scenario. If somehow we do make a higher low, that's going to be our alternate scenario. Make a higher low, we hold on to the lows, we hold on to the 200-day moving average, and we start going higher. Then fine, SPX has a new high. We move this B over here, but I am not counting, no matter what scenario, I'm not counting on making a brand new high. We'll probably get into this 90% retracement scenario and consider it a double top and head lower from there. But it should look something like this, to where we get a new high. And maybe we fill out this wedge just a little bit, don't make a new high, and this bearish rising wedge breaks down. Okay, that's the scenario we're looking at. I just don't see this whole Santa Claus rally happening. This is a huge rally we had. Maybe that's all we have. Okay. I'm switching back to the bearish, but we're not confirming it. Just to resolve the end of this video, we're not confirming it until we get this new high here. If we do not get this new high here, then I go back to saying that we're going to make a lower high somewhere, likely the flag top. I'll show you on the other board. Likely just to back here, making a retest to the flag breakout. If we don't make a new top here, we look to back test and go to higher prices. All right, but we'll have to have some sort of ending diagonal. This is a massive move, so perhaps this will be the largest wave. Pullback for 2, smaller 3, smaller 4, and eke out a wave 5, losing momentum. That's what I have for you today. This is very, very important. I think both of those scenarios are likely to happen. I don't see any other scenario really happening because of the structure that the Qs have given us. This is the shortest leg, so this has to be a correction. Has to. 100% has to be a correction. So it's going to get a new high. Whether it's today or tomorrow, or whether it's get a lower high, a higher low, and then set a new high a little bit later on. All right, I hope that helps. Thanks for joining us here. Don't forget to like the video. That's the best thing that you can do for this channel. Have a wonderful day. We'll talk to you. We'll update you tomorrow.